Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 21st of February. No doubting what has been on the mind of investors this week. We've got a two pressure valve situation evolving, which has sent markets further south. On the one hand, of course, we've got the increasing geopolitical tensions with the news coming out of the Russian-Ukrainian situation seeming to flip-flop on a daily basis. It's certainly this level of uncertainty, which of course it's very difficult to deal with, and something which has put a lid on any share price gains. At the same time, we've had a couple of inflation prints on both sides of the pond showing that inflation is certainly running hot at the moment. And of course, this has put question marks over whether central banks will continue to be even more aggressive than they have in hiking rates in an effort to stem that inflationary tide. So in the year to date, after those further downward movements, as I say, the Dow Jones is now down 3.6%. The S&P 500 is down 8%. The Nasdaq is down 12.3%, and the FTSE 100 is still trying to fly the flag on a positive basis. It's actually up 2.3% in the year to date. Moving on to next week, fairly busy corporate calendar, and also the remaining UK banks will be reporting their full year numbers. Certainly with NatWest and Standard Chartered now out of the way, investors will be hoping that the best is actually yet to come. They've been mildly disappointing, those results, for one reason and another. So kicking off the results next week is HSBC, shares up about 30% over the last year or so, clearly with 60% of its profits emanating from Asia. Some eyes will be focused there, and what's quickly becoming a general theme in terms of the season so far is not only the release of bad debt provisions, but also the embarrassment of riches that this has caused a couple of the banks. And we've already seen a couple of increased dividend and indeed new share buyback programs announced. We'll see whether that continues next week. Following on from HSBC, we've got full year numbers from Barclays. Something which describes itself as the universal banking model, had a reasonably good time also over last year, shares up 29%. One thing which may be worth looking out for is, given the current volatility within markets, how its trading division has been performing. And bringing up the rear in terms of the UK banks, currently the preferred play in the sector, it's Lloyds Banking, shares up around 38% over the last year, often seen as a bellwether for the UK economy, so that will be an interesting development to see how its lending book has grown, particularly on the mortgage front. And when we last heard from them at the third quarter stage, underlying profit, if you strip out any impairment releases, was actually up 27%. So hopes are going to be reasonably high from Lloyds. Elsewhere and outside of the banking sector, there's also going to be some updates from the likes of British Airways owner, International Consolidated Airlines. Interesting to see how the lifting of restrictions has affected its fortunes. And similarly, on the basis that it's paid on hours flown, we're also expecting some numbers from Rolls-Royce, which has obviously had a turbulent year of its own. Sticking on the pandemic theme, we've also got an update from Intercontinental Hotels. There has been some positivity recently that people are starting to travel. And finally, again, a good economic barometer, we're going to have updates from WPP, which should show us how the advertising sector is currently faring. Thank you for watching. Have a great week.